Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, February 5th. We are looking at the SPY ETF's market profile here on Window Trader. And plain and simple, a standing ovation for the bulls this week. As the SPY closes up over $17.50. All indices are up. They all hit all-time highs. These three, Russell, Qs, and ES and SPY. Dow does not, neither does the transports, but very, very good day overall. I'm going to go over everything. I did not trade SPY well today. In fact, the best trade I had and the biggest trade I had all day was in Russell. And I'll go that one actually first because we'll go over that. I'll go over them on the profile, and then we will recap the whole week on the charts as we look to week 2 of February. So here's the Russell. Incredible finish again for them as they go out with a price probe. Again, all-time high. They do end up 10 wide. The trade I took now, I'll go. The reason I took the trade in Russell's because I wasn't reading SPY right. It was very choppy. It was rotational at first, and then I did a poor trade, which I'll go over in B period. And so when I saw Russell coming down today in I told the room, I said, we are 8 wide. I said, now again, I'm in 4 tick increments, I believe. Yes. If you put this in 1 tick increments, at the time, value low was right around where we got to an where I and J got down to was value low and half back at the time. Obviously, it got raised when we went higher. I said, if we get down to around value low and half back, I am taking a call play to go back to POC. Well, I did. Didn't do it in I did it in J, and J was basically got a couple of pennies below those levels, and I bought 150 of the 219 calls. Now, if I had the fortitude to hold on to them, I would have hit a grand slam, forget about a home run. But it did pay me nice enough where I did get out of them to take back my loss and a bunch more that I had made in SPY. The thing I have to work on, as all traders have to hold on to some. I said the goal was to get back to POC. I didn't even hold on to 10 of them to get back to POC. And that's shame on me. Now, I know we were one time framing down, but it was a perfect P shape at the time. I thought for sure the odds were at least 80% of going back to POC. So I should have held on to some for POC. And then look what it did after it got POC. K stopped the one-time framing down, raised POC, and then exploded to new highs. So I'm very thrilled with that trade, but it could have paid so much more if I had the patience to hold it. So all-time high again in the after hours in IWM. Triple Qs and SPY were very similar today, but they threw me a curveball, and I'll tell you about that when we get to SPY. What Qs did and SPY didn't was when Qs made a new high, they went trend. They had single prints in F, single prints in G. We never did, and that cost me on a trade, and I'll show you that in a minute. They didn't hold the single prints. They go out. Basically, you could use K probably as an afternoon rally high for something to lean on, and then their all-time high. So let's go to SPY and what happened and what I did and didn't do, which would have made my day a lot better in SPY. Oh, one other thing. I apologize. Let's go back to triple Qs. I did take a long in triple Qs. In A period, I took a trade in all 3 of these today for the first time ever at one time. I took a long in triple Qs when it filled the gap and then popped back up. I bought the 314 calls that expired today that I got paid on. So I made nice on that, but my best trade of the day is by far the 214 calls that expired today in the Russell. Now, let's go to SPY. So what did I do in SPY? Here's a trade that hurt me in SPY and then kept me out of another good one. So B period started one-time framing down. I was like, okay, we didn't fill our gap though. M's high is where my gap gets filled. So when it pushed back up, I thought for sure there was a good chance we'd at least go down and finish the job. Not because the market's weak, but I figured maybe we'd at least. In fact, I wasn't even looking for the gap fill. I was looking to go back to A's low. So I took a decent sized put play. And I said, if it gets above wherever B's high was at the time, I'm going to get out. Well, guess what? I didn't do that. And then C opened, kept sitting around, and then it takes out B's high, starts running. Now, I should have taken it off right away. I didn't. I didn't take it off up here, luckily. But I didn't take it off where I should have, and it cost me pretty good. Now, lo and behold, C came all the way back down, and so did D. Basically where I was looking for. It didn't get all the way down to A's low, but got close enough where I would have actually made money. So that kind of messed my head up a little bit. So I really didn't do much. In fact, I took trying to think where I took the next trade. So here's the trade I didn't take. SPY makes a new high in G. SPY makes a new high in H. Poor high at the all-time high. You know how I love fading these new highs when they aren't getting distance. But two things entered my mind. Number one, my mental reserve is a little messed up from this mess up here. And I was looking at triple Qs, which had gone trend. I'm like, oh man, I think it's a good put play because we're not getting any distance, but are we going to start attempting to go trend? Look at H. H took out G's high in Qs. Pretty good. So I didn't take the trades, and look what happened. There would have been beautiful fades in both G and H back down where it would have been a nice trade. You see how important your mental reserve is. And for whatever reason, my head was a lot clearer looking at Russell at the time when it came down here as opposed to SPY. Maybe sometimes it's a good thing when you're not reading it right or whatever to look at the others either. So the good thing is, I could have easily have taken that trade, say, oh, I want to get my money back. And it would have been the right trade. But because of what happened earlier and because of what triple Qs were doing at the time, I didn't take it. And that's really all I did. I took one short in M that basically scratched. I thought we would for sure, when we got down here, take out. We lowered the POC. We raised POC to G slow. Then we lowered it again to B's high. Thought for sure L and M were poor. F and L were poor. C and D were poor. I'm like, maybe we'll just get a flush. It didn't happen. I bought 30 puts. I made some on 15, lost some on 15, basically scratched. So that's how the trading went. So it was a good week. That IWM trade helped me out tremendously. It would have helped me out. It would have been a home run trade if I held on just a bit longer. All right. Destinations for Monday. Well, I'm going to use K as a afternoon rally high, just to have something else to lean on. So K is the afternoon rally high at 388.03, and then we have today's high, which is the all-time high. It's a weekly high, and it's also a poor high. For the downside, we have our 10-wide POC at 387.42, B's high. Then we have today's low of 386.49, and filling that small gap at 386.24, 25-point gap. Then we have 385.46, the price probe from yesterday, and then 384.97. I used L as the afternoon pullback low. I never took it out. So we'll stop there on those. You should have the other downside destinations. Let's go to the charts and look at all three of the indices. We're going to start with the Russell. We'll do the SPY last. Okay. So here's the Russell. It is one time framing up, 5 months. It closes at an all-time high, and it has a price probe at the end. You know the way we say a trend is still fairly young as it gets away from previous highs? Well, look at what it's done each month so far. Gotten away pretty good. Now this month, we just finally got above it, but it's only February 5th. So the question is, do we get more and more extension, or does it come back in? I mean, we're above last month's high by almost $4 already. So the monthly is incredibly healthy in the Russell. Weekly, we had an outside week down last week. We took out the previous week's high, closed below the previous week's low. I said 205 is a critical area. Well, we never saw 205 again this week. 205.76 is this week's low. You talk about a risk-reward trade, right? You could have gotten out below the 205 level. Well, it went from 205.76 to 221. Up. Came out of balance to the upside right now. I'm calling it up in the monthly. In the weekly, I'm sorry. Daily. Came out of a balance. 5 days. One time framing it up, 5 days above the all-time high. So again, everybody says this market can't go higher. They want to short it. It's gone too high. Right now, all 3 time frames in Russell are up. Wait for it to come into balance. Right? Well, look, we came into balance last week. The trade was if you come out of balance to the downside. Never did. So that trade was null and void to even think of taking. But a lot of people, I bet, went home short last week because of where it closed, thinking we're going to come out of balance to the downside because we closed at the low of the 3-week balance at the time. I'm not saying that's a bad trade to look at, but obviously it didn't happen. Triple Qs. Monthly, up. One time framing up, 4 months out of an inside month. We're going to be pretty similar to the triple Qs, at least on the monthly. Healthy. Not getting the same distance that Russell is, but healthy. Weekly. They did not have an outside week down last week. They closed back inside last week's range, so it was balance. Now, again, we close above. They did take out last week's low, but we close inside, so balance. Last week's high was 330.32. We closed at 332.40. Again, balance is a subjective. It's an art, not a science. Do you want to say it's up? You can. Do you want to say it's balance to up? You can say that too. So let's call Triple Q's weekly balance to up. And then on the daily, up. One time framing up, 1, 2, 3, 4, 5 days. 5 days. Gap is your main focus, up. So again, at least 2 out of 3 time frames are up, and the weekly's at best balanced, at worst, I should say, balanced up. People are looking to short the market. Markets don't go bull bear. I can't stress that enough. Here's SPY now, NES. One time framing up 4 months out of an inside month. Healthy. Weekly. Same as, well, actually a better week than triple Qs because we had an outside week down that was firmly rejected. I'm going to call weekly up. Last week's high was 385.85. We closed at 387.71. We closed $2 above it. Again, can you call it balanced up? Sure you can. I'm calling it up. I'm going to give the bulls their due. Now, look at the volume this week, 287 million. Look at last week's volume with the outside week down, 453 million. So the volume, again, continually dried up on the way up. It's only one part of the equation, though. And then the daily, we're up, one time framing up, 5 days. We had a bad tick again. Today's low, I'm sorry, is what's today's low? 386.49, not 386.14. I'll fix that now after the video. So gaps are my main focus. Today's gap and Tuesday's gap. We have 2 gaps below us. So we're up with 2 gaps as my main focus. Ladies and gentlemen, the market is up right now. It doesn't matter how overbought you think it is, how it shouldn't be here. We talk about this constantly. As long as the Fed is backstopping this market, you can't look at valuations, metrics, earnings, anything, and trade what's in front of you. You'll know when it's time to take a short for a swing trade. Look, I've been taking shorts during the day time frame. Of course you can. But I'm talking about people who are more inclined to look for a swing trade or just so adamant that saying this market is ridiculously overbought, it's coming in. Yeah, it probably will at some point. But is it going to come in from this today? Or are we going to go to 400 first before it comes in? So wait, especially on the longer time frame. Well, not even on the longer. Wait for the daily one. We're not even in balance in the daily. Remember, look at this as a tanker ship. It takes time to turn around. If the monthly and weekly are up, well, you can't do anything until the daily comes into balance. Does that make sense? You got to understand that. The monthly and weekly can't come into balance until at least the daily stops one time framing up. Well, we're one time framing up right now for 5 days. So keep that in mind. Good luck trading today. Enjoy the weekend. Enjoy the Super Bowl if you're going to watch it. And we'll speak prior to the opening on Monday.